Welcome back. Let's check futures this morning. We're expecting a fractionally higher opening from the broader averages, although the S&P and the Nasdaq just went negative. The big story, of course, after the market closes tonight is NVIDIA earnings, and that will likely set the tone for tomorrow. Joining me now to look at the business is the head of wealth at Citi, Andy Sieg, with us with insights on markets, policy shifts, and the wealth business coming up. Andy, great to have you.
Great to be here. Thank you.
Congratulations to you. Well, this is, I think, one of the first times I'm talking with you since you made the move from Bank of America to Citi.
Thank you. Thanks for the opportunity.
Yeah, and I want to get something out of the way right before we start. There are reports out there that there has been a hostile environment, that you actually made an executive cry in front of colleagues. Citi has responded to these reports. Bloomberg and the New York Post. Citi writes this: Andy is a seasoned leader with decades of industry experience who has helped strengthen Citi wealth since joining in 2023. We remain confident in his leadership and focused on delivering for our clients. But what is your response to these allegations, Andy?
Well, no, thank you, Maria. We've known each other for a long time. Won't surprise you that the stories themselves are not accurate. What I'd say overall is change is hard, and we've been driving a lot of change across Citi and in our wealth business. That change is working. I'm happy to say it's been fantastic to have the company very lined up and responding, as you just read to your audience, and we're on the move. And so this business is, the performance of the business has been transformed. We're going to keep driving that hard. One of the things I'm most proud of, the quality of talent that has risen up inside Citi and joined our part of the business from outside has been phenomenal. So we're moving ahead full speed.
So you've got colleagues that are supporting you, is what you're saying?
Oh, across the board. Yeah. And so this is, hey, it's disappointing to see a story like that, but but it's not throwing us off our game.
Well, I can understand change is hard. You've had to fire a handful of people as well, so that obviously is also difficult. Tell me about the business. What are you seeing in Citi's wealth division right now as we watch markets hit record highs?
Well, this is a wealth business like no other. We're unmatched in terms of how global this business is. And then in a place like New York, I mean, we have an incredible presence here through Citibank in New York and in other markets around the country. So when we look at this business, we think about the power of the brand, the client franchise, the talent that we have. Our objectives are very ambitious. We want this to be the #1 wealth business in the world, and we're on path to do that. And right now, we're not the biggest, but we're certainly one of the fastest growing, and you can see that over the last several quarters.
Well, I feel like Morgan Stanley really saw this early on in terms of bulking up its wealth business. What do you need to do to get there in terms of taking it to the next step? Is it scale? Do you need to acquire more assets under management?
Well, I mean, the first thing we needed to do was reorient the strategy, make investment advice and providing investment advice central to what we're doing with our clients, get our cost base in line. We've done that. Now we have organic growth happening. There are things about this business that others can't touch. Morgan Stanley's done an amazing job, but their franchise and others nowhere near as global as Citi. I mean, Citi is an American bank, but we have a global network unlike anyone else. And wealth creation is not just happening in the U.S. Markets are spreading around the world. So when we look in Asia, phenomenal wealth creation across Asia. Even in a relatively slow-growing part of the world like Europe, incredible wealth creation. And among ultra-high net worth clients, globally investing, being globally minded, that plays to Citi's strengths.
President Trump has been able to lure big money investors and countries to invest in America, whether it's corporate America or, the Saudis and individuals from the UAE. What are you seeing in terms of the investor today who wants to move money around? How attractive is the United States to them right now?
Well, I mean, the U.S. is incredibly attractive. I mean, when you think about the president's policies, I mean, the president's policies are now coming together in a way that investors around the world are recognizing. You've got, the tariff regime in place alongside deregulation, alongside stimulus. You can see the market reaction to that. It has defied the skeptics in terms of what's happening in the market. And so investors see that. And when they think about a financial institution, they love the idea of an American bank with the dynamism, the entrepreneurial strength of an American bank, but with global DNA, which makes it very easy for investors around the world to connect with us.
Well, I think that's a great way to say it. With DNA of investing across the world, where would you recommend your big clients to be allocating capital today when you look across the world?
Well, I mean, there's no market in the world like the U.S. I mean, the U.S. is the global powerhouse economically. People forget, we talk about the scale of the U.S., but the U.S. economy is larger than the combined next 4 economies in the world. If you put China, Germany, India, Japan together, it just barely matches the U.S. economy. So this dynamism, this level of innovation, the fact the U.S. is out in front on topics like AI, brings capital in. Now, Europe has been ignored for years by investors, and so there's some opportunities to take advantage of that valuation differential in Europe right now. So we do see some portfolios increasing European exposure, and again, many of our clients, our typical client is very globally minded, so they tend to have a fairly balanced global portfolio.
Yeah, when we were talking with Christine Lagarde last week, the president of the ECB, she was telling me how she's trying to lure investors to go invest in Europe. But I wasn't sure the backdrop was actually, strong enough. She's had to cut rates 200 basis points, 8 or 9 times in just 16 months.
Growth has been a challenge. Level of dynamism in the European economy is nowhere near what the U.S. economy or other economies around the world are showing. However, as I said, many of those equities have been under pressure for many years. There's some standout companies in Europe. So, an investor who understands these markets can pick up opportunities in Europe. But again, on a macro basis, all eyes are on the U.S.
Tell me your take on privates right now. A lot of investors want to get their hands on private companies, thinking that that's really the growth story of tomorrow. We just spoke with the commissioner from the Securities and Exchange Commission, as well as Secretary Scott Bessent, who is trying to open up the opportunities for individuals to invest in privates. Yep. What are you doing at Citi regarding that, and how do you see that?
Well, we see great interest in privates.
You do.
Of course, we want private companies as well as public companies to be able to finance themselves in the U.S. markets. That happens today. That's, again, a great strength of the U.S. We commend what the administration's doing with regard to private companies. Our investors, they want to have more access to direct private investments. They also want to see the secondary market increase for private companies as well. We help directly and indirectly. Partners, private equity firms, for example, create a pathway for investors to get exposure to privates. But family offices today are viewed by many private companies as a tremendous source of capital because they tend to be, the private companies have a long time horizon. They like family offices that tend to have a long time horizon as investors. It's a very dynamic part of our business.
We spoke with the Secretary about Fannie Mae and Freddie Mac just a few moments ago. I want to play this sound and get your reaction, because I guess this is a deal that every bank on the street wants. Here's Secretary Scott Bessent with me moments ago. Watch.
That's what the banks have advised so far. A $30 billion deal would be one of the biggest deals, maybe the biggest deal in history. And these are very large companies, valuations in the hundreds of billions of dollars. So if we were to sell a 3 to 6% stake, it would work out to at least that.
Has the president decided on which bank will be the lead bank?
Well, every bank's going to be. All the big banks are going to be part of something that's this size, and we're honing in on that. The president's been busy doing peace deals, trade deals, tax deals, and he can multitask better than anyone I've ever seen.
Well, that was new information that they want to sell between 3 and 6% of their holdings in Fannie Mae and Freddie Mac. Are you expecting to be part of that deal?
We sure hope so. This is going to be one of the largest, most exciting offerings in world history, and so all eyes are going to be on this deal.
Do you think there's investor interest?
Oh, there's incredible investor interest, and hey, we've been proud. Jane Fraser, who you know well, Jane had an opportunity to be with the president just a few weeks ago, and we're very hopeful that we're going to be able to play a role and to help support this.
What are the most important questions that you get from investors, from your client base, in terms of what they want to know right now?
Well, I think there's two different kinds of questions. Non-U.S. investors are, they are more focused on the deficit and the dollar. U.S. investors, not so much. U.S. investors are focused on the tax, on taxes overall, but they're not throwing money at stocks. This does not have the feeling of a late-stage bull market, and so we think this market's got a ways to run, and our clients want to make sure they're smart about it in terms of navigating some of the tax topics. That's top on their agenda.
As we all do. Andy, great to have you this morning.
Great to be here. Thanks again,
Thank you so
Maria.
much. Andy Sieg, running wealth at Citi. We'll be right back.